Hey guys, what is going on? Welcome back to my Robinhood portfolio. As always, hope you guys had an awesome day investing today. You can see my portfolio up top there in the red, unfortunately. Did pull back a little bit today, $368.80, representing 1.07% of my overall portfolio. Did get a little bit back in after hours trading there, $27.74, but overall did trend down a bit here today. That's in comparison to all three major indices, which were all in the green today. S&P 500 up 0.28%, Nasdaq up 0.21%, and the Dow 30 was up 99 points, 0.50%. As we scroll through my portfolio here, you can see a lot of stocks in the green. Notably, however, a few stocks did pull back here. Most notably, Portola have a large position, 90 shares, $2,200. Did pull back 4.3% today, as well as one of my my largest holding, Ford as well. They pulled back 1.4%. So, as you can imagine, if I have the majority of my shares in stocks pulling back, 2%, 1% here, my overall portfolio is going to pull back as well. Which kind of brings up the question: what do I do in a scenario like this? A lot of you guys have been asking, how do I get out of stocks? And if a stock is losing money, do I instantly jump out of the stock? And I would have to say no. I actually take the opposite stance on this. If a stock that I like is dropping in price, I actually put more money into the stock. There's this whole thing called value cost averaging. Basically, you're putting in the same amount of money per fixed interval, whether that's per week or per month, into a stock. And if the stock goes down, you simply buy more shares of the stock to make that same price. It's a very good strategy for buy and hold investors. It actually works better than dollar cost averaging, where you just simply pick the same number of shares per month or per week, for example, and buy that stock moving forward. Value cost averaging, however, puts in a fixed number of dollars into the stock. So if the stock price goes down, you buy more shares. If the stock price goes up, you buy less shares. So I take the philosophy that if I like a stock, if I think it's going to be a good buy and hold stock, that is a stock that I plan on holding for 1 to 5 years, I go ahead and buy more of the stock. So Ford Motor Company here, if it drops tomorrow, I'm definitely going to buy more for it. I'll probably put another $1,000 into Ford if it drops again. Again, I like this stock moving forward. This is the buy and hold stock for me. I envision having this stock for probably 5 years plus. So that's my strategy. Let me know what you guys think about this strategy. I've done this since starting this Robinhood portfolio. Made quite a bit of money doing that, actually. I'm going to continue doing that moving forward. So if there's a stock I like, if the price is moving down, I actually buy more shares of the stock. I don't get out of the stock, as a lot of you guys have been asking or suggesting I do. No, I don't do that. I buy more shares of the stock. So yeah, just kind of wanted to talk about what happens when one of your stocks that you like starts trending down. Do you sell it off? Do you buy more shares? You just kind of hold? And I'm definitely in the philosophy of buying more shares. Holding wouldn't be a bad idea either, but definitely buying more shares of a good stock will make you money in the long term. In the short term, you might lose some more money. If it continues to trend down, you're going to lose money in the short term, but overall, in the long term, the goal is to make money. So buying more shares of a stock that you like when it cheapens up a bit is definitely the way to go, and that's what I've been doing with my portfolio. So yeah, like I said, let me know what you guys think of this strategy, if it's good or not. Some of the more seasoned investors would love some input on that as well. But again, my portfolio today, down a bit today, $368. Hopefully it'll rebound tomorrow. But again, if my Portola or Ford does trend down, I'm going to put a little bit more money in, holding those for the longer term. So yeah, kind of end the video with that sentiment. If you like my videos, feel free to like, share, and subscribe. Building the channel, learning about the market is it's essentially what I'm putting out these videos for. Hopefully you guys have been learning a little bit along with myself. And kind of with that, I'll see you guys tomorrow.